Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the energy sector. We're going to take a look at emerging markets, financials, and we're going to look at some tech stocks. Okay, so first up, let's look at XLE. This is the Energy Select Spider, and yeah, as you can see here, it closed down nearly 1% today. What happened is the middle Bollinger Band here, currently at 7658, it is failing to turn into support. You can see all these candles are hitting this the dotted purple line here, and so failing to close above that level and then closing back below EMA's 4, 8, and 13 today, below this pink, green, and orange lines. That's signaling more downside risk. Okay, so this is signaling that it's it got rejected here at the attempt to get back above the middle Bollinger Band, and then now that it could pull back further, you're looking at this 7450 level, and then you've got the lower Bollinger Band down here, and in the 50-day simple moving average at 7312. It's likely to retrace down towards those levels if that middle Bollinger Band remains resistance. Now, if you look at DWT, this is the 3 times inverse crude oil, and now this did close up 3% today on the big drop for the XLE and for oil, and as you can see, the chart is really heating up here. Let's see here, it closed above the middle Bollinger Band back here on the what is that, the 25th of May, and that was the signal that a possible new uptrend was starting. You can see the last close above the middle Bollinger Band was back here in April, and so that level has been holding down here at 780, the dotted purple line. As long as that level holds, the uptrend is intact. Now on Friday, it closed above the green line, which is the 50-day simple moving average, currently at 876. This candle right here signaled more upside potential. Today there was nice follow through. So DWT has a very strong uptrend going. It needs to break the closing price here on the 10th of April. It hit that level and pulled back. If it can get above that level, and that the support from back here in March turns into resistance. If it can bust through this 975 resistance level, then the next target's going to be the 100-day simple moving average at 1030, and then this gap. There's a gap between low of day on this candle and high of day on this candle, and the bottom of the gap level is always tough to break. So if it comes up here and hits that bottom of gap and 100-day simple moving average level and fails to break, that would signal a temporary top. As long as EMA 4 right here at 902 is holding, the uptrend is super strong and it should continue. If it does pull back below that level, you want to see that 50-day simple moving average hold. We'll take a look at DRIP. This is the oil and gas bear 3 times, and it did have a strong day today. It closed up 7%. It's been working on the middle Bollinger Band, this dotted purple line. There was a close above that level back here on the 26th of May, and that level failed to hold and it pulled back. Well, today it closed back above. So if it can stay above the 679 level, it could possibly start a new uptrend. And so the next level to break is going to be the 725 zone, the closing price here just above 725, and then you'd be looking at the upper Bollinger Band. if the middle Bollinger Band, it turns into support and it gets a new uptrend going, we look for a retrace back up to that 50-day simple moving average at 894. You can see that's lined up with this previous support level. That will be a tough level to break when tested up here at 825. So yeah, so we'll keep an eye on DRIP and see if it can get a new uptrend going. You can see the big volume down here. If it does close back below that middle Bollinger Band, below that 680 support zone, that will make it a risk to hold. Now check out GASX. This is the natural gas related bear 3 times. It did have a big day today. It closed up 8%. This is a thinly traded ETF here. It only has 49,000 shares were traded today. It's trying to turn the middle Bollinger Band into support as well. If it stays above that 1947 level, a new uptrend should begin. You can see it had been working on that level just like DRIP, and then if it could turn into support, what you're looking for is a run up there to that 50-day simple moving average at 2293. You've got the high close here just above that level around 23, and then the 100-day simple moving average at 2455. The big thing right now is going to be turning the middle Bollinger Band into support to get the new uptrend going. Now if it were to drop below that 1950 level, that would make it a risk to hold long. Okay, take a look at DGAZ. This is the velocity shares 3 times inverse natural gas. This is an ETN. It closed up 4% today, but notice how it's been in a really strong downtrend. Okay, so UGAZ has been in a strong uptrend. It's interesting how GASX, I'm not sure exactly what all the companies are in each of these, but for some reason GASX is performing much better. You can see here how GASX is above the middle Bollinger Band, above EMAs 4, 8, and 13, but DGAZ did close above EMA 4 today down here at 2280, putting it in play, but it's still below EMA 8 at 2309. It's still in a very strong downtrend. Okay, so it's got to get above EMA 8 and then get above this EMA 13 at 2360, and then it could possibly get moving, and then you have the middle Bollinger Band up here at 2463. Now if it closed back below EMA 4, that'd make it a risk to hold. It's a really nasty downtrend. It did have this volume spike down here with that lower wick. It looks like there's some loading. We'll see if we can get above EMA 8 and get the a sustained bounce going. Right now it's not much of a bounce, but we'll see if we can get something going. Okay, let's look at EDC. This is the emerging markets bull 3 times. So the emerging market bull heated back up today. This is thinly traded. I remember when this used to have a lot more shares traded, but yeah, it's thinly traded now, only 159,000 shares. It's getting above the RSI, above 50. If it can stay above 50, that would be bullish. It's back above the middle Bollinger Band. That's the key level to hold at 111.79. As you can see, the candles have been trying to turn that dotted purple line into support. The middle Bollinger Band is also the 20-day simple moving average. If it does hold, a new uptrend could begin. You're looking for this green line here, the 50-day simple moving average at 116.61. That's going to be the next target. And then as you can see here, this red line, the 200-day simple moving average, has been the big tough level to break. It will need to get above that level to head higher as well. Right now, it's just all about staying above that 111 level, staying above 112 basically. This is 111.80. Yeah, so we're going to see if it can get a new uptrend going. There was a PSAR bull flip. Yes, the emerging market has been under pressure. As you can see, this has been a very strong downtrend, and so it has to turn the middle Bollinger Band into support to get a new uptrend going. Another sector that's been under pressure has been financials, and this is the FAS, ticker symbol FAS, financial bull 3 times. You can see it closed up nearly 2% today. It's been heating up. It has a good a bounce going here. It's right at the middle Bollinger Band. As you can see, it came down here and it bounced off of the 200-day simple moving average. That level did hold down here at 64. This is the 200-day simple moving average has been big support for a long period of time. You can see it it held all through here in March, April, and May. And then again here in May it held, and then now it's back at this middle Bollinger Band level. If it can close above 67.10, that would be bullish. And then what you're looking for is it has to turn this gold line into support. The 100-day simple moving average is at 68.58. Notice how each time it hits this level, it fails to hold and pulls back. And so once it can get above that level, 2 white candles in a row would be a bullish change in trend. That would be a clue that it's heating up and ready to head higher. So we'll keep an eye on FAS and see if the banks can get going. It failed to break that middle Bollinger Band would signal it's not ready to go. Now let's take a look at some technology stocks. This is Google, ticker symbol GOOGL. It is on a very strong run. As you can see here, it closed up nearly 2% today, over 1.5% today. It's on a 4-day run. Notice the declining volume pattern. So volume is falling as the price is rising. That is a bear divergence there with the volume, just signaling that the buyers are tiring as the share price is getting higher. Now it's coming up to this all-time high close level here on the 12th of March. It's going to need to break that level to head higher. That's at about 1165 or so, and so when it gets up to this level, let's see here. Yeah, when it gets up to that level, it will need to close above and turn that level into support to head higher. So it's on a 4-day run. It can keep pushing. Right now, it has the bearish 3 gap ups reversal pattern formed. So this is a strong reversal pattern. It just signaling that the chart's getting frothy after the multiple gap ups in a row. That, notice the spaces between the candles, and so it can keep pushing. You know, a lot of times you do get a 4th gap up in a row, but with each gap, it's getting frothier and frothier, and it could, you know, eventually cool down. This will be a likely level to take a breather. So keep an eye on it. If it fails to break, it could possibly pull back into the band. So notice today's candle did form above that upper Bollinger Band. You know, that signals the chart is, you know, when the candle gets above the upper Bollinger Band like that, it's really pushing hard. You could see it pull back to test that EMA 4 at 1124. As long as that held, the uptrend would still be super strong and intact. Okay, let's look at Amazon here. Amazon is on one heck of a run, closed up nearly 1.5% here. You can see, look at all these white candles in a row. I mean, this is just an incredible run. Up 8 days in a row. It keeps riding EMA 4 at 1643 support higher. As long as that level holds, the signal is to keep riding. Once it drops below that level, then you can see a pullback, and that'll give you a trading opportunity. Right now, you know, it's breaking out to new all-time highs. This is what we call a blue sky breakout. There's no overhead resistance. It's just cruising. It's doing it on very light volume. I mean, look at the volume down here. There's just no sellers. They're just walking it higher. I mean, look how light the volume is. So, yeah, the largest volume day was 4 million shares. It's not like it's super strong volume. Keep an eye out for you know, a climax spike. That could be a clue that it's going to take a temporary pause. Yeah, we'll see. This is just a super strong uptrend. Once, like I said, a red candle, you know, could be a clue that it's cooling down. But if EMA 4 is holding, it signals just to keep riding. Once there's a close below, then that'll provide a trading opportunity. Okay, let's look at AAPL. This is another stock, Apple, that's just breaking out. It's just an incredible move. You know, it's hitting these all-time high levels. Today there's a little indecision on today's candle. Notice how the candle's above this purple line. That's the upper Bollinger Band. The candles might work their way back into the bands. There is a gap between high of day yesterday and low of day today. You know, so a drop down to EMA 4 down here at 190 would fill the gap. You know, as long as it keeps riding EMA 4, like I said on the last chart, the stock is super strong and the chart's intact and it signals to keep riding higher. You know, this is on blue sky breakout territory. You know, the only resistance is this upper wick right here. You know, so we've got the technology sector just breaking out to new all-time highs, and of course the top companies in the world like Amazon and Apple and Google are leading the way, and so you just have to keep following the charts. The intraday charts will signal that it's breaking down first, so keep an eye on that if you're a trader. You know, long-term investors, congrats to you. You know, this is a major payday. If you look at Alibaba here, ticker symbol BABA, this is breaking out as well, hitting new all-time high levels, over 2% here. Very strong candles. You could see today it's breaking out above this high close from January, and so that does signal more upside potential. 210 now is the big level to break. What you want to see now is you want to see it stay above this high close level. So you want to see 205 turn into support. You know, you don't want to see it drop back below 205. Then that could form a temporary top at this level. You want to see that level turn into support, and that would signal it wants to keep pushing higher. The EMA 4 at 203.89 is the big level to hold. As long as it's holding, and you know, even EMA 8 down here at 201, the signals to keep riding. Notice how all these candles here have been riding above that level, you know, and Baba's just been cruising since it formed this double bottom down here in April. Okay, and then now they're just keep pushing higher. And one more to leave you with is Snap. Take a look at Snap here, up 6%. This is a chart we've been working on in the chat, and so yeah, these let's see, this is from yeah, this is from a last, I believe this is the chart from Friday, and then yeah, I just reposted this today in the chat. And so it was hitting the bottom of the gap level on Friday. There's a gap between low of day on this candle and high of day on this candle, and so today there was an open above that level and it did push higher, so that is signaling more upside potential. The next big resistance level is the 50-day simple moving average at 1308, And so that's the next target. You can see there's no candles in between these two candles here. You could go back here and find some resistance, but this is signaling more upside potential. As long as Snap is riding above EMA4 down here at 1168, the chart's super strong. Now, if it were to drop back below this level and drop back below the bottom of the gap, that would be a red flag and signal more consolidation. You can see it was in this channel for the whole month of May, and then it finally broke out above, and this is signaling more upside potential. It's on a 4-day run now. We'll see if it can work its way up to that 50-day simple moving average. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. I'll post the link below the video. Thank you.